Good morning, everyone. Today is Monday, March the 18th, and this is the Moneyball Morning Report for the Benzinga Pro platform. As many of you know, I am in Portugal, having a little bit of a difficult time doing our midday stream, so I have some new streaming software I'm going to have to sort through. But first of all, I want to make sure that the trades and the positions are on properly. So that's going to come second in the space, which means that the only updates we're going to get are going to be recorded ones, because those are the ones that I can look at the charts, record them simultaneously, and then send them up. So we should have a fair number of quick updates through the week. By Friday, I should have figured out how it is to use this lower bit rate stream recording software and then just stream it directly as a live YouTube with a private link for us to have that we can come together. And if that works out great, then maybe we stick with that. But as many of you know, I am quite technically challenged, and that is going to be the storyboard. Okay, so what do we have today? We have SPY. First of all, I am going to go through what we have going on. I'm going to move all of these, the majority of these, to neutral to bullish, but with a green picture and not a red one, because here's what's happened in the gap up this morning. I'm going to go through all of the charts very quickly, and then we're going to look at the volatility bands. But what's happened is we've gapped up, and that's trapped a lot of short sellers that have come in over the last 3 days, and they are likely to buy to cover, forcing us back up into the 514, 515 area. Okay, so that's what we're seeing with SPY. The lines in the sand are there. We're going to look at them a little bit more closely, but we just want to stare down these moving averages and see what's going on. These guys are the only ones that I have in the yellow neutral to bullish, because this current candle is the one that they are using to try to get back up over the 20 simple moving average. The same, exponential moving average. The same thing is happening though. I believe that shorts are trapped, and the gap up is showing us that they are doing their very best to attempt a buy to cover. Now, here is one of the only other what do we want to call this, ETFs that I'm focusing on, and it really is the XOP, and it's simply because we've got a call butterfly in here that is going to start accelerating as price action moves to the north. I've got an alert set at 155. I want you to set that alert as well. From the weekly perspective, last week we ran like a house of fire. From the daily perspective, we're also doing the same thing, although we are sitting very close to the most upper edge of this double smooth stochastic. So we could have a fade that brings us back into the upside. My thought is this. Wednesday is going to be a huge day, right? We're going to have the EIA. We're going to have FOMC. Just a lot of things going on. If we have a bullish day today, it might be a great time to say, you know what, I'm going to cover the majority of my XOP call butterfly, and we can add back on the retrace. But one thing that we're seeing, materials, energy, commodities, these sort of things, they are really starting to move. And I'm not really sure too many folks are prepared for it. But if we take a look at this, I'm going to show you this one too. This is the materials sector, right? This thing is also coming up into critical resistance. See how it's topping here? It's very likely to come back into support, but that is where the buying opportunity is going to sit for us. I'd like for it to be around here, but this might be something that's going to be very, very interesting from a sector rotation sort of space. All right, let's get to the ES. Again, same sort of thing. Why is the weekly is very bullish, but let's take a look at the daily. Taking a peek at this. Wow, hang on, 2 secs. I don't know why this notice disappeared, even with nothing going but my recording software. We are still slow. Nope, we want this on all the time frames. Holy smokes. This annoys me so much. All right, well, I am going to move this back. Neutral to bullish, yes, of course. But when we go to the daily, our lines in focus, we can see how clearly bullish this looks relative to everything else, particularly the Qs, right? The NQ is well on its way to testing these edges, and the 8 simple moving average has held as that breakaway spot that says, hey, as long as we're hitting there, that's really all we need to care about. So that one's moving very sharply. Every deep dip is getting bought. Of course, you know, my thought is that people are sitting on the wrong side of the straight. Look at how the NQ has flattened out. Notice, still neutral to bullish. People are still buying the dips, but we are awfully close to that 20 simple moving average, and we've come in and tested it several times. No new highs. So we have got sector rotation going on in here. Let's take a look at the YM. The YM looks pretty good. It's, you know, come down. It was sitting up here when I put this on. It is into neutral bullish formation. Why? It's fairly far away from the 20 and the 8, but it had a high that it absolutely faded from on Friday. And that is something that we have to go, my dips are still buy zones. They could be very deep, but I have to tell you that I suspect the first couple of days this week are going to be very noisy because of the Fed. And nobody's thinking that they're going to do anything, right? So they think they're going to go, hey, data dependent, we're sitting where we are, we're not moving interest rates down, everything seems fine. And so that is what they are anticipating. The next one they're looking at potentially for June. Okay, but it is by the dip. Here are the key lines in focus. Let's go to the RTY. RTY, again, up over the 20. That's going to be the thing that makes me go, you know, this will go from green to yellow. Pullbacks or buy zones, you know, my thought is that people are trying to get inside of this place that hasn't been performing as well as other elements. But I'm not sure if that's a good bet or a bad bet. Here's the thing. It has been a bet. I would say that this probably came in and tested, what, maybe the 30 simple moving average last week, but bounced right off of it by Friday. And it's up in a sideways pressure event. So let's watch for that. Oil is getting ready to be in a rollover, and so we have to use the CL2 contract here in Trendspider. Still incredibly bullish. Coming up off of 80. Look at the heavy congestion here. You know, this is an important line. This heavy congestion, I do want to clone that, move this right around here. I would not be surprised if we see mean reversion. We had a mean reversion for quite some time. It broke out. If you want to look at a measured move, $77 to $79, that's $2, and $79 to $81, another $2. My suspicion is that this is going to pile into a fair bit of resistance, maybe. See where the candlestick bodies and the wicks collide. Somewhere around this $81.70 to $82, and then it'll pull back and start running again. But this measured move for $2 of expansion has been accomplished. All right, last one. Let's take a look at gold. I believe that this is where gold is. Yes, it's doing very nicely. It is in a breakaway formation, but reversion to the mean does look like something it's trying to do. They've come in to support and, you know, are now bouncing up into that region that could end up being more resistance or less resistance. I have no idea. Do not have a real pulse on the market. You know, I'm not really watching it that closely, really, particularly gold. All right, now let's go back to SPY and take a look at these volatility bands. I haven't done them in several days. So let's see what's going on and pay attention to what happens intraday. Notice, second volatility band is where most of the price action begins to revert. The more time you spend under the VWAP, the more likely it is that the bounces will be sell zones and you'll have further dips. Notice what's happening today. Traders are saying, hey, I'm going to sit above that VWAP, and the volatility bands are holding that first standard deviation to the second standard deviation right there. So it's a tight area. When the price action opens up, because we've gapped in the pre-market, what we have to see is, are the buyers strong enough to hold price action into this old area, 514.20? That's going to be key, right? My thought is we shouldn't have any runaway trains, but this formation here says buy the dip. And if the dip gets below that second volatility band, you need to take your hands off if you're thinking about buying, because what it could do is get down to that second band, bounce, fail to recover the first band, and then rotate right back down, okay? So these are the edges that you're going to watch. If you're taking 0 DTEs, you know that these are the edges that you go, I'm going to try and buy that, and I'm going to buy it into resistance. Oh, I'm going to try and sell that, and I'm going to sell it into support. And those are the things that we can watch for. You have the noted levels. Let's go to the Qs, see what their volatility bands look like, right? Same sort of thing. Traders buying the dip. Key level, 436. Momentum is very strong, but here's the thing. When momentum is strong and trend is strong, it doesn't mean there's a reversal. It means buy the dip. And so as long as we stay above this VWAP, price action is going to move to the north. It absolutely is. If we can bounce and then fade, we'll be in great shape, right? We'll be in absolutely great shape. My thought is that we will bounce and fade because this entire tech sector is under extreme rotation pressure. Okay, let's go to the ES. Take a look at the vol bands here. Same sort of thing. Look, dip into the VWAP. VWAP is pink. Buy the dip. Where do you take profit? You want to take profit when it gets to the second volatility band. And as long as it stays above that first volatility band, you don't have to worry about it. But if it loses the first volatility band, it's going to come back to the VWAP. So if you're going to be quick, I say buy the dip into resistance and then sell it off there. Here's the thing. We've got momentum. It's still upward. It is still buy the dip. But we have divergent action. Here's the thing. As long as trend is up, it doesn't matter what this divergent action says. It means buy the dip. It means buy the dip. Okay, so wait for these things to come in to their 20 or their VWAP. You buy it. If it stops heading higher, you're sitting in the wrong direction, and you've got to take some profit. Let's take a look at the NQ. Sorry about the sniffles. I've got a horrible cold. Here we are. Buy the dip. Same thing. Look at this. It is sitting between the 1 standard deviation and the 2 standard deviation. Real upward slope. There is a lot of buying pressure here. A lot of buying pressure. And so the dips are going to be buy zones. They are going to be buy zones until they break that VWAP. So what do we expect the buyers to do across the board in all of these instruments? If they've been long in the pre-market, they're either going to try and step on the necks of sellers by going even longer into the open, or they're going to go, you know what? I'm taking my profit. This is support from Friday and, oops, hang on. I want to duplicate this. This is support from Friday, yeah, overnight, or Thursday. Thursday, this is from Thursday, and, that's old support, could be new resistance, right? So pay attention to these sorts of things. Look to the left to make sure, and once this stops cresting higher, it is time to take your money and leave. All right, let's lastly go to the YM. Not going to hit the others. Here's the YM, the 30-minute. Looks a fair bit different, right? So we have to get a little bit more color on what's going on. The YM is selling off, right? Look at where it is. It's still, look at the slope of the vol bands. It's sideways. This VWAP is sideways. So what does that mean? We buy the deep dips. Here's a deep dip all the way down here at 39,054. Let's move this one up into that space because it's the bottom of the volatility band. It's a place to consider a buy zone, right? Way down at the base. But you're going to also want to sell right up at resistance because pre-market, this chart has said, I've got trouble somewhere around 39,200, right? When will we be wrong selling the bounce and buying the dip? When we break out of these edges. That's going to tell us a totally different story. That's what we want to watch for. All right. Good luck today, everyone, and I'll see you on the platforms.